Crypto and the stock market continue to crash. When will we find the bottom? And I'm seeing some warning signs from Bitcoin whales as they start to sell off. Are we seeing the end of the bull market? I'll give you all the details and the data. And the United States is about to make some big moves with stablecoins, using it within different government agencies. I'll give you the details. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, it's great to be back. As many of you know, I went on vacation with the family. It was a nice break. But guys, I think I picked the right time to go on vacation because the market has been tumbling, both the stock market and crypto, guys. We are seeing red across the board. Now, as always, I want to leave my emotions at the door and I want to share data, the facts, the on-chain metrics, and much more so we can form a thesis as to what's happening here. We don't want to get emotional about what's happening here because that will not make us educated investors. It would make us emotional investors. And we need to make sure we're looking at the market holistically, zooming out to make sure the macro thesis is still in play. So if we look at Bitcoin, it is currently sitting at $78,000 and it broke below the 200-day moving average. Now it did that earlier in February, and we saw earlier in this bull market, specifically last year during the summer, it went below that moving average. But this is not a good sign. So what we need to see is a strong recovery out of this because this is a warning sign. And I'm being transparent with you guys. I often say, let the market show us what it wants to do. Now, can we call home and say, hey, the bull market's over based on this? Of course not, because there could be a strong recovery out of this like there was last summer with the Japanese yen trade. The market bounced around below that moving average and then came out and then huge parabolic run in Q4. So this is a warning sign, but it's not an absolute factor saying this thing is over. What's a good thing is that the DXY continues to break down. Look at the big red candle on the DXY selling off strong. That's very good for risk assets. Obviously, there's a lag here, right? So we got to wait to see risk assets deviate from this. And as I mentioned at the beginning, the stock market is also selling off. You look at the NASDAQ and the S&P 500, huge sell-off. We got an FOMC hearing next week. And of course, there's still concerns about tariffs because it's been bipolar with Trump. In one moment it's on, the next moment it's not. So the market hates the uncertainty, guys. And this is not a good sign overall. But I'm still bullish, guys, based on what I'm seeing. Now, let's look at some on-chain metrics. We are seeing the crypto fear and greed index at levels not seen since COVID in March 2020 and in December 2022 when FTX collapsed. Can you believe it? We have the most pro-crypto government ever. We got the SEC dropping cases. We got altcoin ETFs on deck, and you have the president signing a crypto executive order, right? As establishing a Bitcoin reserve and a digital asset stockpile. But there's so much fear in the market. And guys, based on this data, I bought the dip. No bullshit. I'm not lying to you, and I'm not giving you financial advice. I'm not telling you to go buy, but I bought Ethereum, I bought XRP and SWI. I bought the dip. And the reason being, as I've been saying for years on years, and I hope you guys have been listening to me, be greedy when others are fearful and fearful when others are greedy. And you want to buy the blood on the streets. This is the blood on the streets, guys. This is the blood on the streets that I've been telling you guys for so long, but not many people are able to execute on this because their emotions take over. But we're not operating by emotions here. I'm showing you the data. I didn't make this up. I'm not telling you a story. I'm showing you the data. I'm telling you what is being reported here on chain. And you're going to see a lot of comments. It's over, this and that and all that, right? But people won't back it up with data. They'll just tell you how they're feeling. But once again, we don't want to move by feelings. So I bought the blood on the streets. I will continue to do so as we go lower because I see this as a huge buying opportunity. And you have the macro backdrop and all these things setting up beautifully for a continuation of the bull market. Now, remember back in the last bull market, Bitcoin went all the way down after hitting the first peak in 2021. It then crashed down so hard. I mean, big drop, right? Kind of like what we're seeing here a bit. and it went below that 200-day moving average. That wasn't good. Everybody thought it was over, but then it rallied up and then went to a new high later in the year. Could we see something similar? It's possible, but it doesn't mean it has to repeat exactly. History doesn't repeat, but it often rhymes. We'll see what happens. But overall, guys, the market being this oversold, this down, sentiment so much in the dumps, there's so much fear. This can't last forever. The same way the greed can't last forever at the top, at the bottom here, the greed can't last forever, guys. Markets will continue to go up. When in doubt, zoom out. So we got to be patient here. And one good thing is that another CME gap has been filled. So this is the gap from last November between $77,930 and $80,600. So we'll see what happens with this. And then global M2, guys, global liquidity continues to rise. This is the data here, and Bitcoin has been highly correlated to it. Now, there is a lag between global liquidity and Bitcoin, so the Bitcoin price has to catch up here. So this is a very positive sign, in addition to the DXY falling down. Now, macro investor Raoul Pal also shared his version of the global M2 chart showing the Bitcoin price correlation, and he says this too shall pass. Crypto is still feeling the tightening in liquidity from the stronger dollar and higher rates in Q4 of 2024. That is almost done, and financial conditions are easing fast, and M2 is headed back to new highs. This is just a regular correction. We had the exact same correction in 2017 caused by the same reaction to Trump policies, higher dollar and higher rates, which then reversed. He continues saying, over time, we just keep climbing the log regression channel. Whether we stay at the main red or climb above it by another standard deviation or two remains to be seen as the cycle develops. We are still early in the business cycle using ISM, and as the ISM rises this year and into next year, crypto will rise with it. Patience and less drama, please. You know the don't F this up rules. So once again, he's using the data now. He's not just telling you a story or fairy tale, right? Oh, this is bullish because I feel this way, or this is bearish because I feel this way, but rather, hey, look, the macro backdrop here is still very bullish despite the volatility we're seeing right now. Now, signals that have indicated the top, like the Bitcoin Pi cycle top indicator, still not flashing. That doesn't mean it will be perfect every cycle, but this thing is nowhere near flashing the top. The CBBI score is lower now. It's at 72 that the top is not in. It hasn't hit the peaks that it has 90 and above in the past cycles. Bitcoin whales, though, this is a warning sign for me. And I'm being transparent with you guys. This has me a bit concerned. I'm a bit worried about this. Bitcoin whales with wallets of 10 or more Bitcoin is on the decline, which means they're not accumulating, guys, as they were all of last year after the big sell-off in April, May from the buy the rumor, sell the news event of the Bitcoin ETFs. So this is something I'm concerned about. I'm going to let this play out and see if it continues, if it leads to some sort of massive drop like we saw last year. But even if there is some sell-off, guys, it doesn't mean the bull market's over, just like it wasn't over last year. It just means we've hit a local top and they're selling. Then as the price is depreciating as it is now, they're going to scoop up and then keep going. However, caveat now, if this signal in conjunction with other signals are all flashing together saying, okay, it's over, end of story, the music has stopped, then, we'll have to adjust accordingly. But right now, a warning sign, but not a reason to panic, right? So just hope you guys understand what I'm saying here. I'm trying my best to convey it because we did see a dump last year, but it was early in the cycle. Now, typically the cycles run in that 4-year window. So there's still a blow off top to be had this year. If everything goes according to plan here. And coins on exchanges continue to be at an all-time low, so we're not seeing a ton of coins being moved back to the exchanges to be sold. So that is another top indicator. We saw a lot of coins move back last year around the buy the rumor, sell the news event in April and May with the Bitcoin ETF news, right? So they've been moving coins off the exchanges since then. So still a good sign here. Now, Bill Barhydt, who I just had on the podcast, he's the founder and CEO of Abra, also gave his perspective, which I think is really great. He says, y'all never change. Bitcoin is now experiencing its 11th 25% plus correction in 10 years. And every time everyone reacts like the sky is falling, and every time everyone screams that it's different this time, this pullback looks, smells, feels 100% just like 2017 to me. Rising fiat liquidity leading to massive asset price gains. Right now, the new admin has decided that we need one, lower treasury rates to refinance debt, lower mortgage rates to unlock the housing and CRE markets, lower treasury rates to save the banks from their collective insolvency. China is in a deep recession and needs lower US rates to support its own money printing regime, and print they will. We're likely going to see massive job cuts via government cuts, tech cuts, and housing related cuts. At the same time, ISM will likely rise for the next several months. All of this tells us liquidity will continue to flow and the markets will do what they always do in this type of cycle. The liquidity will flow into stocks, Bitcoin, crypto, and real estate. Once again, buckle up. So guys, you got to zoom out here. Once again, I am seeing some warning signs as I'm being fully transparent with you guys, but nothing to panic about saying, hey, this thing is over. So we have to watch it closely though, right? And this is why I'm going to share all these data points with you guys so that we can keep a close eye on it and see where we're at in the timeline. Obviously, no one has a crystal ball, but we use the data we have at hand, and we're not waking up in one day feeling bullish or bearish. It is, what is the data telling us? And guys, we're still in a bull market. I'm going to get trolled. People are going to call me crazy, but they never back it up with data. They just use their emotions. So don't be surprised if you see a whole bunch of people saying stuff. And of course, there's people shorting the market. So you got to make sure you are able to filter out that there are people going to say a lot of bearish stuff because they have shorts and they want you to sell. They don't want you to buy. They want you to sell. They want you to feel the fear. But as mentioned earlier, even when you're at the top, the euphoric zone doesn't last forever. And when you're at the bottom, the fear and the dread and the misery doesn't last forever. It will bounce, right? We've seen time and time again. Go back and look at March 2020 and what happened, right? Nothing like what's going on now, where you have some sort of massive black swan event, pandemic, or even December 2022 with a massive crypto exchange collapse and a ton of fear at the bottom of the bear market, right? So very different. We are in the midst of a bull market. Now, guys, quick word from our sponsor, and that is BitGo. BitGo is one of the top tier crypto custodians in the industry. They have been around for a long time in multiple bull and bear market cycles. They're headed up by Mike Belshi. And folks, they have over $100 billion on their platform. They are working with many enterprises and businesses in the crypto industry, like 21 Shares, which launches Bitcoin and Ethereum ETFs, Pantera Capital, that's Dan Moorhead's hedge fund, Swede, a token project, Bitstamp, the crypto exchange. So they're working with many big names, and many folks trust them. And once again, they've been around for a long time. Now, they also have a great retail solution, guys, where you can buy, sell, trade, stake your crypto. They also have a great self-hosted wallet that you can check out. So BitGo is a trusted platform used by many big enterprises. And if you'd like to learn more about them, go to bitgo.com. Link will be in the description. Now, we got some very interesting news coming out from the US government. Obviously, we saw Trump sign the executive order to create the Bitcoin reserve, digital stockpile. We know crypto legislation is coming this year. And I've been telling you guys for years, we're headed to the token economy, where the markets and the economy will be running on blockchain. And here, Treasury Secretary Scott Bessent says, we are going to keep the US the dominant reserve currency in the world, and we will use stablecoins to do that. Guys, I hope you see where things are going. I hope you're able to move past the noise and the FUD and the fear and the price volatility and see that this is the future, the next layer on top of the internet. Many people are missing it. They get caught up with headlines, the emotional aspect of the market, and they're missing the building that's happening behind the scenes. So you really have to have a long-term outlook. Now, there's also news that the U.S. Housing Department is considering using blockchain and stablecoin integration to enhance operations. Incredible stuff. It says here, per the report, a recent internal meeting at HUD, which is the U.S. Department of Housing and Urban Development, focused on the possibility of using blockchain technology to track grants. Guys, the governments, the public sector, the private sector, they will all use this technology. Do you see where we're headed? And guess what? They're going to use public blockchains, guys, with private features, of course, on the public blockchains. But they tried the private blockchains and it didn't work out for them, right? A public blockchains is the way to go. And you count yourself lucky that you recognize what's happening and you get to hold the tokens of these public blockchains. That's the game here, that you get to bet on some of the winners that are going to be used by the governments, TradFi, and much more. Really big news. Now, we got a report here that Trump is expected to sign another crypto executive order as soon as this week. Sources tell Sander Lutz of Decrypt, I believe. Yes. And which will focus on rolling back Biden-era anti-crypto banking policies. The order will likely target Federal Reserve policies that have prevented crypto banks from gaining coveted master accounts. So White House officials confirmed to me that an executive order in this area should be expected in short order. So I think of Caitlin Long with Custodia Bank, because she's been trying to get a master account, but the Fed has been blocking, and we know why, right? But guys, things are setting up for an epic bull run. The banks are free to operate in crypto. They're going to launch services. Crypto specific banks are going to get their master accounts and plug into the Fed. I mean, this is so bullish. But right now, people are just looking at the price, which, don't get me wrong, the price is important. My portfolio is down too, right? But I understand the long game, the macro game here. Now, Coinbase to hire 1,000 workers, saying President Trump breathed life back into the crypto industry. So these crypto companies are going to start hiring like crazy. So if you want to work in the crypto industry, now's your opportunity. And I've often said, if you want to start a project and be an entrepreneur, an innovator, now's the time to go pitch your project and get that funding, guys. Things are going to start ramping up with the government loosening up here. Also, Coinbase to launch 24/7 Bitcoin and Ethereum futures trading in the US. Another example of the more crypto-friendly environment and these companies able to do more. So competition's going to heat up, not only among crypto companies, but the banks. Like I said, the shackles are off these banks, and these crypto exchanges and custodians better up their game, because the banks are coming and they already have the customer base. They already have the branding. They already have the resources, and a lot of them have the money to go just execute on these things. And they may try to actually acquire some of these crypto startups and players in the market and build out their services that way, right? Why go build from the ground when you can just go acquire some of these companies? So, guys, this year is going to be epic with the competition. We got some interesting news around Tether. So Thailand's SEC officially approves Tether's USDT as a compliant cryptocurrency. The stablecoin wars are heating up, guys. And, everybody's making big moves. Obviously, Tether is the largest stablecoin issuer, and they've been around for a long time, but they got a lot of competition, like PayPal's PYUSD, Ripple's RLUSD, Circle's USDC. So stablecoins are going to get really, really competitive. And we just heard a couple of weeks ago from Bank of America's CEO that they want to launch their own stablecoin. So banks are going to get in the game. All right, final news item here. The new SEC under acting chair Mark Ueda is considering abandoning part of a 2022 Gensler era proposal that would broaden the definition of alternative trading systems to include some crypto firms. In remarks at the annual Washington conference of the Institute of International Bankers, Ueda said, in light of the significant negative public comment received on the definition of exchange with respect to crypto, I have asked the SEC staff for options on abandoning that part of the proposal. He also is asking staff to re-engage with the U.S. Treasury, Federal Reserve, and market participants to consider whether the commission should move forward with the regulatory changes to alternative trading systems. All I see here is a move towards crypto, embracing it, freeing it up. And guess what? All of this is going to usher in tons of capital, which will drive the prices up. Now, understand that markets move in cycles, both from the micro and macro. You should know this if you've been a viewer, a listener of this podcast. Nothing goes up in a straight line. No stock goes up in a straight line. Real estate itself doesn't go up. So you have to understand the volatility. Yes, crypto is more volatile, but it's a very young market, and that's where you have the opportunity. It actually gives you a lot of opportunity. And this is why we as early adopters have the high potential of making great returns. And I've often talked about my portfolio is up. I'm buying the lows in the bloody bear market. I'm buying now because of the market being down, sentiment in the dumps. And I still think we got another leg up in this market, guys. Higher highs. The bull market's not over. This is based on the data. And I will continue to share the data with you guys to help you navigate as well. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. And guys, a great way you can support me in the podcast is by subscribing to my free email newsletter. It's 100% free. It's on Substack. Check out my book on Amazon. It's available in paperback and digital. And if you want to expand your crypto knowledge, check out my new course at mycryptocourse.com. This is a comprehensive course that covers every aspect of crypto. What makes it unique and very different from other crypto courses out there, it includes expert commentary. You will hear from founders, CEOs, institutional investors, breaking down the different aspects of crypto to you. And it includes videos, of course, full text write-ups, downloadable materials, and you pay a one-time fee. You get lifetime access. Go at your own pace. Sure to log in with your friends and family if you want. So if you'd like to learn more, go to mycryptocourse.com. Guys, thank you for watching and listening. I appreciate you all, and I'll talk to you all later.